Welcome back to Morning Trade Live. I want to focus on the big picture ahead of the opening bell. Ahmed Riesgo is with me, Chief Investment Officer at Insignio. Good morning to you. We woke up this morning, things seemed to somewhat calm, almost a little positive, only to hear about tariffs on the EU and Apple, and that really turned the market. What do you think of this action? I mean, it's sort of here we go again, but we did recoup much of the losses that we've seen over the last few months.
Yeah, I mean, to be quite honest, it's perfectly predictable. If you read The Art of the Deal and you sort of see the step-by-step process, there's always going to be a step like this where you sort of threaten to walk away, which is what Trump is doing out there. We've been hearing reports that Europe has been sort of slow-stepping the negotiation process, expecting to get a better deal down the road. So this was perfectly predictable. I mean, no one could have predicted exactly what day was going to happen, but that something like this was going to happen is perfectly predictable. But I think overall, the trend of the tariff war and the trade war becoming less of a concern for markets, I think that trend is still intact.
There's also this feeling that each headline is not as dramatic anymore. People are getting used to, you know, Trump's style of really sending out the big balloon and then, you know, taking it down type of thing. So, you know, we're down 1.25%, 1.5%. That's not a huge move. And some people say when we sell off, it's a buying opportunity. Do you see buying opportunities on sell-offs?
We do, and we think that again, this is to be expected, right? What's going to happen down the line is that Trump is going to say, "Hey, I had a great phone call with Brussels, with leaders from the European Union, and we're going to be meeting." So that will happen. So you know, people need to get what's important here is that the second derivative of trade has now inflected upward. So that's what's being priced into markets. Now, what would sort of cause us to change this thesis would be if we were to see a dramatic shift in that. But this is not that.
So what kind of opportunities? I mean, I do want to talk about some big picture stuff, but I mean, just for the stock market and bonds, I mean, you know, where do you step in and put cash to work then?
Look, right now, we still think we're going to be sort of in this period where in the short term, markets are going to be still facing. We've actually been surprised by how sharp the recovery has been, even though we did expect the market to have bottomed sometime around April 8th. I mean, we could retest those lows. No one knows for sure. It's impossible to say what the market's going to do in the short term. So we've been impressed by the sharp recovery level. This could pull it back, but over the sort of, let's say, 6 to 12-month window, we think markets will be trading slightly higher from where they are today.
Right. What do you think about the big, beautiful bill?
Look, that's not going to be what the final piece of legislation looks like. We know that the Senate still obviously has to sort of say their part, and then from there will be a reconciliation process. So the final piece of legislation will likely look very different from what we saw come out of the House just yesterday.
All right. In the meantime, when we think about what's going to happen going forward, June 1st is the day he's talking about the 50% on EU. That is also the day for OPEC to decide if it's going to produce more. And we've seen oil under pressure this week. I mean, maybe lack of demand or whatever. What are your thoughts on energy and oil?
Yeah, look, I think that's actually helping Trump quite a bit. And it's pretty clear to me that the Saudis are purposely trying to flood the market to keep prices down because that's helping Trump domestically because it's providing a disinflationary force to the inflationary impact of tariffs. But at the same time, it's also putting pressure on Iran and Russia, things that Trump wants. So the Saudis are definitely trying to play ball with the Trump administration and purposely trying to flood the market, drive down the price of oil, and they will also gain market share from this. So this is also a way for them to punish some of the OPEC members that have been cheating.
How much of a big deal did you think that Moody's Monday downgrade of U.S. credit rating? What did you think of that?
I would say, thank you. You're sort of 15 years late to the party. S&P 500, did the downgrade, S&P did the downgrade back in 2011. Moody's sort of took 15 years to do so. It wasn't a surprise to us. I mean, the U.S. doesn't deserve a
Right.
AAA rating, and nothing that we've seen in the short term here leads us to believe that the U.S.'s spending problem is going to be coming under control. So I would say great that Moody sort of came on board, but they're definitely the last train to have left the station.
And in the meantime, I mean, when you think about the dollar and the strength there, are you worried about the dollar and or folks selling off U.S. bonds?
Not so much purposeful selling. I know that that's been a sort of narrative out there, but there's no indication that either sovereign wealth funds or other sort of strategic buyers or holders of treasuries have been selling. The dollar is expensive, so it's expected to go down. Despite what's going on in the trade war, the dollar was around 20% expensive on a PPP basis. So the long-term trend for the dollar is lower. By the way, that's something that will actually help the U.S. economy, or at least Trump's purported a call to increase exports and manufacturing in this country.
Yeah, understood. I mean, when you talk about opportunities in this market here, I mean, are there certain levels that you watch for? Are you looking at tech when it pulls back, a level on the S&P? I mean, the Mag 7 always seems to be something that people want. They want it. I mean, you could say whatever you want. People, are interested in NVIDIA and the others. Your thoughts?
Look, I think the Mag 7s are wonderful businesses. I think going forward, that's not where the growth is going to come from. I think, if anything, they're going to become ballast in people's portfolios. They're going to be sort of these cash cows, almost like utilities in the future. Now, they're not there quite yet, but I think that's what they eventually will evolve into. I don't think the growth is going to be coming from the Mag 7s. I think that growth has already been priced into them. They're going to be there more as defensive positions in people's portfolios down the line. Growth is
We'll
going to
be
have to
getting
come from elsewhere.
Yeah, we'll be getting Fed minutes next week. Some folks would like to see the Fed cutting rates sooner than later. It doesn't seem to be on the agenda at the moment. Your thoughts?
Yeah, I think the Fed should be cutting rates sometime soon. Unfortunately, I think actually some of the politicking that's happening in a public space is actually preventing them to do so, right? Powell is going to want to seem to be independent and not bending to Trump's pressure. So, in a weird way, Trump's public campaign or pressure tactics on Powell might actually end up backfiring on him, because the chairman might be reluctant to cut rates, even though he might want to.
I think about the consumer, and that's what drives our economy, our GDP, et cetera. I mean, we're seeing some of the travel stories doing well, right? The cruise lines, for example. But we've heard from the likes of Delta's talking that people are pinching the purse. Any thoughts on the consumer? I mean, many of the retailers are withdrawing their guidance. We'll talk about some of those names today. It just, how much confidence do you have in the resiliency of the American consumer? They do love to spend.
They do. I have less confidence than I did 6 months ago, because I do think the consumer is in a worse spot that they were 6 months ago. But look, all the indications we're getting is that they're holding in. I think part of what's being lost in the headlines regarding Trump and the trade war is that this earnings season has actually been a very solid earnings season. The drop in the EPS for 2025 was from 275 down to 265, which is where we're at today on consensus for like EPS guidance. So it hasn't been a very dramatic shift at all. The earnings season came in much better than expected. And part of that is due to the resiliency of the U.S. consumer. So weaker than when it was, but not in troubled waters quite yet.
Yeah, and last but not least, I mean, I think about the small caps and alternative, ways of making money, maybe Bitcoin, maybe looking abroad. I mean, is crypto abroad, small caps, anything else of real interest to you these days?
Yeah, I mean, we have a pretty aggressive price target on Bitcoin, over $150,000 here as a long-term fair value. But we also continue to like gold. We think gold is in a structural bull market as well. So we will take any pullback in gold as an opportunity to add to those positions. We're also looking positions abroad for the first time in a long time, because even though I think the U.S. will still remain exceptional, it'll still be a better place to deploy capital than other places in the world. The gap between the U.S. and ex-U.S. is certainly shrinking, and that might mean a moment where you have some outperformance in ex-U.S. assets.
Right. What's going to drive that Bitcoin price to 150,000, and how quickly can that happen?
It's impossible to say when. I sort of take that price as a percentage of money that goes into gold and other precious metals, eventually heading into Bitcoin. And what you're seeing is that as people lose confidence in some of the policies that are coming out of Washington, there is no other substitute for the dollar. So what you're seeing is some of that flow going into gold, but some of that flow is also going into the crypto space. And Bitcoin is actually increasing their market share of that, right? It was around 65% a few months ago. Now it's around 75%. So what you're seeing is that Bitcoin sort of first mover advantage, it will eventually morph into what I think it will eventually be, which is as a store of value.
Right. I mean, we've heard Anthony Scaramucci saying once it hits 500,000, it'll be a total asset class, just like gold. Do you also like Ethereum, Solana, XRP? Are you looking at the others?
We're starting
Ethereum
to
did
look at
so
it, but we
well this
still don't
month.
have a sort of a formal opinion on those. Right now, it's been limited to Bitcoin, and it's precisely because of the first mover advantage in that space.
Right. And how do you, when you do invest in Bitcoin, how do you do that? Are you using ETFs or stocks that have exposure?
I mean, there's several ways to do it, right? How do you gain or exposure to that ecosystem? You could do it the old-fashioned way through crypto wallets. I think some of the newer ETFs that have come out are much better than what we had at the beginning. So that's, I think, also one way to do it. And then through the miners.
Ahmed Riesgo of Insignio, thank you.